So basically, huh, basically, generally what it is said that working capital, it is required to use the fixed assets profitability. Understood? For example, if there is a machine, okay, if there is a machine, it can't be made, means you can't use the machine until you have the raw material. So for fixed asset, what is required is working capital. Is it clear? The funds which are required for day-to-day operation and transaction, that is working capital. They are provided by what? By cash and cash equivalent. Those are forming part of what? Current assets. Okay. Now, when you have adequate working capital, means what? The firm has the good short-term solvency. If they have adequate working capital. Inadequate working capital means what? That the firm will not be able to meet its immediate payment commitments. Means current liability can't be paid immediately. So they are facing that problem. Okay. Funds that are procured from long term as well as from short term sources. Please understand. Hence, see, we procure fund from long term also. Any example on long term fund? Long term sources? Debenture, equity, those are long term sources. And you have some short term sources also. Short term sources, bank OD, cash credit. Okay, those are short term sources. So you should understand that the mix, okay, what you have, long term, please remember, long term sources, liabilities can be utilized for long term assets. Are you understanding what I'm saying? Long term sources, that is equity, debenture, all these things can be utilized for long term as well as short term sources. Okay. And but short term sources, short term credit, short term liabilities should not be used for the long term. Do you agree with this? Okay. Clear, na? I was clear, right? I'm just clarifying. I just want confirmation. Was I clear what I said? Imagine the balance sheet. Imagine the balance sheet. Liability side. Top, you have equity, T format. Equity you have. Debentures you have. Long-term sources can be utilized for fixed asset as well as for working capital. That proportion you need to decide. Generally, practically I am saying the companies utilize 80%, 70 to 80% to the fixed source, 20 to 30% to the working capital from the long-term source. But short-term, bank OD, you can't take bank OD and buy fixed asset. Short-term should be utilized for short-term. It can't be applied for long-term. Are you understanding? There needs to be a balance between working capital, liquidity and profitability. Okay, I'm very much worried. I'm very much worried that I should not fall short of cash. That doesn't mean I keep excess cash. That is excess liquidity. That will affect what? That will affect my profitability. I have an opportunity to earn, but because I'm keeping it with me, okay, I can't earn that profitability. Yes or no? Understood? If I keep the more cash in my cash box, I will lose what? Interest. Interest on that. If I keep less cash box and someone comes to me, okay, for the payment, and if I'm unable to make it, that also will spoil my reputation. So there should be a balance between what? Liquidity as well as profitability. Is it clear? Okay. Current asset upon current liability. Current asset upon current liability is called current ratio. Okay, we will see this in ratio analysis. And this ratio, generally it is said it should be greater than 2 is to 1. Means that ratio should be 2 is to 1. If it is 2 is to 1 means what? 2 is to 1 means what? That 1 rupee, okay, of current liability you have, and 2 is to 1 means twice current assets you have. In your textbook, come to page number 141, question number 12. 141, question number 12. Following budgeted figures are revealed from the records of a manufacturing company. Okay. Equity share capital is 20 lakhs. Retained earnings is 20 lakhs. Oh, there is a mismatch. Please mark this. This is bills payable, outstanding expense, trade creditors, long-term borrowings. Please mark this. And this is your cash bank. So long-term borrowings is 10 lakhs. Now, equity share capital, retained earning, long-term borrowings. Are they part of working capital? Yes or no? No. Trade creditors, current liability. Outstanding expense? Yes. Bills payable? Yes. Okay. In asset side, inventory, raw material, WIP, finished goods. These are all what? Stock, current asset. Debtors, current asset. Bills receivable, current asset. Prepaid expense, current asset. Cash in hand, current asset. Cash at bank, current asset. Estimate the amount of working capital assuming that total fixed asset are rupees 16 lakhs. Assume the amount of working capital. How you calculate working capital? Current asset minus current liability. Assuming that total fixed asset is 16 lakhs. Does fixed asset have any role in calculation of working capital? No. So simple sum. Make a format. Particulars rupees. That's it. No working is required because figures are given. Correct. Particulars and rupees. So let's start. Right. Estimation of working capital. Question number 12. Please do it with me. Estimation of working capital. Particulars, amount in bracket rupees. Estimation of working capital. Particulars, amount rupees. Number A, current assets. In that stock, raw material, WIP, finished goods. Inside I can write 2 lakhs, inner column, 4 lakhs, 4 lakhs, and the total outside stock is total 10 lakhs. Debtors, 8 lakhs. Bills receivable, 8 lakhs. Prepaid expense, 1 lakh. Cash, 2 lakhs. Bank, 5 lakhs. Please give me the total. 4 lakhs. Genius. Current asset. It's A. Then we will write B. Current liabilities. Easy question. This type of question they used to ask in 1975. After they stopped. Now they don't ask such type of question. Okay. So don't expect that this will be the question in the exam. Trade creditors. What we are doing is warm up. 12 lakhs. Outstanding expense. How much? 2 lakhs. Bills payable. Lakhs. Total is 20 lakhs. Total current liabilities. Give it name as B. Net working capital. Net working capital. A minus B minus B. 4 lakhs minus 20 lakhs. 14 lakhs. Wow. The sum. Easy? Yes. Uh, what is the use? So should I jump directly to May 19 question? Acha, acha. You never know, institute. They might ask this in May 2021. Anything is possible. Anything. Huh? Don't give. Anything is possible in life. Life is magic. You should believe.
To be continued.